Hello, everyone. Welcome to Economic Empowerment. This is our session. We are talking about taxes on tonight. So I am going to introduce to you our panelists on tonight. Once they have arrived in the chat, I'll definitely make sure we do that. Awesome. All right. Awesome. All right. So I see each of you on tonight. So we will be talking again about taxes, the importance of it, business and individual taxes on tonight. So we have Mr. Fred Zeno. Wave your hand for us on tonight. Awesome. Mr. Ron Smith. Wave your hand for us, even though we see your name. All right. And Miss Sharon Weatherspoon with Panache Consultants. So I do have their bio information, but I do want them to share just a brief synopsis of what they do, what type of background they come as far as their taxes is concerned, and what do they specialize in. So we'll go forth. We'll start with you, Ms. Sharon. Tell us a little bit as far as what you provide within taxes and how long you've been doing this work.
Well, I obtained my accounting degree years ago from Grambling State University, and I just recently transitioned out of a 26-year career with the Internal Revenue Service. I have worked individual, small business, large dollar. Pretty much I've done it all when it comes to tax, but I have specialized and spent most of my career supervising the small business self-employed department. And I guess I really couldn't say that I could narrow it down, but I just bring a large gamut to the tax field.
Awesome. Great to have you tonight. Thank you so much. All right, Mr. Fred, you can take yourself off of mute.
Okay. Am I okay?
Yes, you're great. Go ahead.
Okay, great. My name is Fred Zeno, and I've actually been in the tax business for over 36 years now, and specialize in individual and small business tax returns. Again, I've got 3 businesses. I have a retail business that I've been having for over 10 years. And also I'm working with individuals who are in mentorship programs. So I've been around in the business for quite some time. Yes.
Awesome. Thank you so much, Mr. Zeno. All right. And Mr. Ron.
Yes. My background is in accounting. I have a degree in accounting. I've also done some auditing with the state and the federal government. And I have a small business, R.L. Smith Consultants, here in Baton Rouge, and I've been in the business around 40 years. And I specialize in individual income taxes, but I also do some business returns. And I work with some LLCs, which I'll get into later, because that's probably one of the most misunderstood names.
Absolutely. Thank you so much, each of you, for sharing. So what we're going to do on tonight, I have a list of questions that I'll be asking you. And then, of course, I will definitely open it up to guests that definitely want to put questions in the chat, and I can read those questions out as well that others may have. But we'll go right into it. I do want to mention, again, this is a service being brought to you by Economic Empowerment through United Christian Faith Ministries, pastored by Mark A. Ellis. So definitely take in all this information in which you're needing pertaining to individual taxes and business as well. So let's get started. Let's go forth within the questions. All right. So that first question in which I have, and it's open to each of you, but definitely Mr. Zeno, I want to bring this one to you. Why is it important for a business owner to choose the proper business entity?
Okay, that's a good question, a fair question. Certainly, when you are choosing a business structure, you want one that fits your needs. And in choosing that structure, it will influence your day-to-day business operations, your taxes. It's going to influence, whether or not your assets are properly protected. So you definitely want to choose a structure that is right for you. We have individuals who are seeking to have a home-based business and may want to start off as a small business owner. A sole proprietorship may be the right thing for you. It doesn't require very much. It is, in fact, one of the easiest business to start is a sole proprietorship. And then you go into partnership, LLC, S Corps, and C Corps. So each one of those have some advantages and disadvantages. As you start forming a structure, a business structure, there are certain requirements you must meet to be in compliance. Sometimes people don't want to or don't need to have that kind of formation when they're getting started, just kind of getting their feet wet into the business. So it may not be LLC or a S corporation may not be the structure for a person who trying to work from home, if you will.
Mm-hmm. Okay, very good.
You certainly want to look at all of the requirements, the following requirements, some of the advantages and disadvantages, whether or not you have assets that you want to protect. Those are some of the questions you want to ask yourself. So you want to look at all of the structures, do some research, find out which one of these is the best fit for you. And what I always say, go to the professionals. They know more about it, than
Absolutely.
you and understand it. Yeah.
Okay, very good, definitely. And those professionals would look like an accountant. What would that look like for someone that's just starting off?
Absolutely. You do have tax practitioners who are certified and have gone through all of the requirements to help you find the right fit for your business structure. Consultants, business consultants, financial consultants, accountants, lawyers. Those people who specialize in setting up and establishing businesses would be those people that and of course, if you go to the IRS website, you want to look for people who have been certified and they have some business integrity. They've been around.
Absolutely.
And, so you want to be with somebody that's going to take care of you and look out for your best interests.
Absolutely. Thank you so much. Anyone else want to add on to what Mr. Zeno said, or he covered it good enough?
I would like to add that onto what Mr. Zeno said. If you do choose to start out as a sole proprietor, you really need to consider your industry because liability becomes a big factor. If you start out as a sole proprietor in business, whether it's a home-based business or any other kind of business, all of your assets come into play as far as if you're sued or if you're negligent in any way. And that's one of the things that the other entities protect you against. So I do agree that in some instances, it's safe to start out as a sole proprietor till you feel your way through, but just be conscious of the liability. Make sure you have some sort of liability coverage or something in place.
I like that. Thank you so much for adding that on as well. There is liability coverage that is available, but definitely make sure as a small business owner and starting off, it could be taxing, we understand, but definitely understanding that it could definitely affect your business if you're not setting it up correctly as well. So thank you for adding that in, Sharon. All right, so let's move on to this next question. It states, how can a home-based business write off things on their taxes? So what is considered a home-based business and how could you write off things as a home-based business? And that's open to either one of you.
Well, I'll start off by saying a home-based business, what is considered a home-based business is an individual who's carrying on in a trade or a business from home. And if you are working from home and certainly there are deductions that are relevant to a home-based business, such as your mortgage interest if you're buying a home, real estate taxes, insurance, rent if that's applicable, repairs and maintenance, utilities. Most common expenses that one would occur in a home are deductible as a home-based business. Now, there are limitations, and there's a worksheet that helps you to determine what portion of those expenses are deductible as a home-based business deduction. And certainly you want to get with a tax professional and our accountant to determine what those limitations are. I'll just speak to that because one of the rules the IRS changed is exclusivity. So if you are conducting business from home, area that you use for your business must be exclusively set apart for business only. It cannot be used as a dual purpose area. It must be exclusively used for business. And so there's a simplified method or rule for determining that percentage versus the actual expense. So just like you take itemized and standard deductions, the same concept applies when determining the percentage of deductibility on those common expenses or expenditures in a home.
Okay, thank you so much for that. You mentioned there is a list for that. Where can one find that list?
It's on the IRS website, and it's a publication 587. You can read that publication. It talks about how to figure the deductions for a home-based business. Okay,
very good. Awesome. All right, Mr. Ron, I have a question for you. The question is, what tax shelter does a wealthy individual benefit from, which the average middle-class individual can benefit from, if any? You're on mute. And he's holding. If either one of you can answer that. Okay, you're ready, Mr. Ron?
It looks like he's still on mute.
Still on mute.
So either one of you can answer. Mr. Ron, you're still on mute. So unmute yourself and we'll have either Ms. Weatherspoon or Mr. Zeno answer that for us.
Oh, we lost them all together. Before we move on to that question, can I add one thing to what Mr. Zeno said about the home-based business?
Yes, absolutely.
That is a big topic that everybody's throwing around. I see so many advertisements say you need a home-based business so that you can write off taxes. And true, you can write these things off, but it's a percentage. As Mr. Zeno said, there's a designated area. If you use a specific area of the house, you take the percentage of that compared to the total square foot area, and only that percentage of your mortgage, that percentage of your utilities, that percentage of the home expenses can be used. The way people say it, they make it seem like you can write off everything, and that is very untrue. And I'm hearing it blatantly out. So it's a percentage, and exclusivity is a requirement.
And not are you only hearing about it, but there's a lot of audits. The IRS audits those returns. And when you have the background with the Internal Revenue Service, you know what I'm speaking of, right?
Yes.
I love it. Okay. So Sharon, I love that you mentioned that it is a percentage, right? So a lot of people may be using the whole, mortgage amount, but definitely understanding the percentage based on the square footage of the home, that is important. And thank you so much for that clarity. It seems as though you were going to give me a little bit more.
No, I was just saying normally it's a 13 by 10 bedroom area that's designated for that space. And when you compare that to the total square area of the house, it's a small percentage.
Right.
Okay. All right.
But it is a deductible expense. Now, the other thing I wanted to add to that is that if it is a daycare, there are different rules for daycares that's operating out of the home. So that should be mentioned.
Okay. Thank
And
you.
what was the question about tax shelters?
So the question pertaining to tax shelters was, does a wealthy individual, what tax shelter does a wealthy individual benefit from that the average middle class individual can benefit from, if any? Yes, you guys are thinking like, is there any?
Well, when you typically talk about someone that's wealthy, you're talking about corporate dividends and things like that, tax write-offs that are significant to large corporations. And then when I think I was pondering the definition of wealthy, but a middle-class person typically doesn't have large interest in corporations. So a lot of times you'll hear, and these are things that people don't realize when they're voting or giving consideration to the things that are being done politically. But when benefits are given to large corporations, in a lot of instances, those are tax shelters for wealthy people as well.
Okay.
Yes.
Right.
And to add to, oh, is he back? Is he on?
No, Mr. Zeno, you can go ahead.
Oh, okay. So just to add to that, I don't know about the wealthy line there, but there are tax shelters that individuals who are in business, like Simples and business related hours, you can write those off if you are contributing to employees and or to your own. There are larger limits in which you can contribute to a tax shelter. And I don't know all of the, I'm not aware of all of those shelters, but there are some that will give you a higher limits than a regular IRA shelter, tax shelter.
Awesome.
And another one that a lot of middle class people
So
don't
we have
think
Mr.
about is a health savings account. A lot of people don't think about that, but we have, especially when you reach a certain age, you spend a certain amount of money each year on health, deductibles at the doctor's office or procedures or medication or whatever. You can also set up a health savings account, set aside up to $3,500 if you're an individual. If you set that up, that money is tax-free. So as you go to the doctor and you pull out your deductions, that's $3,500 you're pulling out of your income. So that's somewhat of a tax shelter as well, that I think is an everyday practical tax shelter for middle class people.
Okay, I like that. That is great to know that that's something that's available to those business owners to use it, what we call within a 9 to 5 HSA health savings account. So definitely that's good to know. All right. So Mr. Ron, good to have you with us. So I do have a question for you.
Okay.
So we want to know the different types of business entities and the benefits. We kind of went into those, but give us the different type of business entities that are out there, and then the benefits of those business entities. So, starting off with the sole proprietor, those things.
Where you have the sole proprietor, and a lot of people don't realize it, is that if you didn't have a regular job when you're a sole proprietor, you're paying into Social Security. And this is a benefit because you have to look down the road for retirement purposes. You can also set yourself a retirement program with a sole proprietor. Then you have the corporations. A corporation is a benefit because if you want to bring in various individuals, or you could go the partnership way, which you can also bring in individuals. And another one, my favorite, is the S corporation, because you're taxed as the regular tax rate for individuals, and you eliminate paying Social Security under that. Well, you would pay Social Security on yourself as a salary because it's a different entity than the sole proprietor, as you do on the Schedule C. So all of them have advantages. It just depends on what stage in life you're in, what you really trying to accomplish. So all of them have advantages.
Awesome. Thank you so much, Mr. Ron. Any Mr. Zeno or Ms. Weatherspoon, you want to add to that? But that was very good. That's good information.
I would like to add one small thing. A lot of people will run out. Everybody's running out setting up LLCs, just like it's raining, without really knowing what's behind it. If you're making $35,000 to $50,000 a year, an S corp really could be your best friend. When you have an LLC, if you're a single member LLC, you're going to pay self-employment tax on that LLC at about or somewhere around 15%. When you have an S corp, the monies that are coming into your corporation, you're required to pay yourself a salary, and you're only taxed on the amount of income that is your salary. You're not taxed on all of your profits. So that's one of the advantages of an LLC. You also have the ability, when you have an LLC, to take out loans against the corporation. And if I remember correctly, you have about 3 years to pay those back. Right. So once your business gets up, your profits get up, or your revenues get up to a certain level, LLC is not always your best friend. You need to start considering the 1120S or the S corporation. And that goes back to what Mr. Zeno said. A tax professional should know that. If your tax professional doesn't know that, you need another tax professional.
Well, I have to inject something in here right now. And you brought up a very interesting point, because most people, when they come to you, you ask them, what is your filing entity? And the first thing they'll say is an LLC, because they have not designated how they intend to file. And they really don't have a clue of what they're getting into.
Right.
So, Mr. Ron, getting to that very point, how does an accountant educate those individuals that are business owners so that they understand it as well? It's good to have an accountant, but they need to know that side of their business as well. So how would you educate someone that's coming into your office and they really don't know the designation of their business or not really savvy on that information? Even when Ms. Weatherspoon mentioned the 1120.
Right.
So that would be jargon for someone that's not in the accounting field. However, you want to educate that person on that, right? So how would you go about educating them on understanding that?
Well, first of all, when an individual comes in, I would really try to find out what their objectives are. Number one, have they previously worked anywhere? Because if they haven't, the best thing they should probably do is stay with a sole proprietorship so they can look for the Social Security benefits further down the road. If they've worked for a number of years, they would probably be better setting up an LLC and designating an entity such as an S corporation or a corporation. Because as you know, corporations are taxed at a flat rate of 21%, which is, an individual may not want to jump off into that initially. But you can always change entities. You can go from an S corporation to a corporation once the need arises. And you can also do the same thing with a sole proprietor. You can change over to an S corporation, a C corporation. But the most important thing, they need to understand the difference between what an LLC is, because legally, Internal Revenue does not recognize the LLC without the entity that they're going to file. But they think that, oh, I'm an LLC. And it's so hard to convince them that they need a filing entity. And I'm pretty sure you all had the same problems also.
Oh, yes, and I might add, I have a lot of stories that I'm sure you do too. But what comes to mind? I just finished working with an individual who was working as a sole proprietor, which almost have no requirements other than filing your personal return and reporting the income activity the income and expenses from the business on a Schedule C, went out under the suggestion of a tax person and formed an LLC. And his understanding of forming this LLC was only for the purpose of protecting his personal assets, not that there's a filing requirement once you form a LLC with the state, because that is formed through the state, the Secretary of State, and now you have a franchise obligation.
Right.
And this person went on for years without filing the franchise tax return, and then get audited. So they look back at everything, and it was a big mess. And when I say big mess, I'm talking about a $40,000 mess of back taxes.
Oh, yeah.
So you definitely, it's worth getting with a professional who is very, who specializes in helping you to choose the right entity and take care of your filing requirements. Most businesses fail not because they are not aware of their services and products and how to deliver, but it is the administrative part of it, and they try to do all of it. You got to stay in your lane.
Very good. Thank you so much. Definitely good information. Staying in your lane, knowing the type of entity to set it under, the designation is important. So very, very good information. Mr. Zeno, we talked, and you mentioned to me before pertaining to presidential hazard zone. So the question is, what is the presidential hazard zone and the benefits of it for business owners?
So what I was mentioning was the presidential declared disaster area, which takes on a whole different concept of filing tax return. There's so many benefits to declaring a disaster as a presidential disaster area. As you know, taking a deduction for a casualty and loss is no longer exists. But when there's a presidential declared disaster area, then there are certain rules that are formed for taxpayers, both individuals and businesses, to deduct certain losses. And then there's the Safe Harbor Act that gives you several options of accounting for your losses during this really tough time. And all of us know someone in our area and our family who was devastated by, the recent disasters. But not all disasters are deemed as presidential declared disaster area. There is a 10% of your adjusted gross income that is typically deducted from the total loss from a disaster. That is usually waived when it's a presidential disaster area or declared area. And there's $100 for every event. And as we noticed in this past disaster, Hurricane Harvey, so the 10% was waived. The $100 rule was changed to $500 rule, which was a great benefit. And in addition to that, you were able to deduct your losses, add those losses to your standard deduction, and go back 3 years and amend those returns and recoup monies from those losses if applicable. So there are lots of things that we can do if we know about these benefits on top of being, overwhelmed with losing not only our valuables and assets, but in some cases losing family members. So it's, but there are benefits to being within a presidential declared disaster area. And so there are also some exceptions to taking monies from your 401k.
Okay, kind of expound on that one as well. Whenever you are taking money from your 401k, how does that work out?
So if it is under presidential declared disaster area, the 10% additional tax is waived. So normally if you take money out your 401k before age 59 and a half, there's an additional tax. And most people under the belief that when I ask them to withhold taxes, that takes care of that additional tax. It is not. The additional tax is always added based on whether or not a taxpayer meets some of the other exceptions to that 10% additional tax. So there are some other rules that will allow you to exclude that 10%, but under the presidential declared disaster area, you can waive that 10%. We just had one Imelda, Tropical Storm Imelda. So during Imelda, all of these rules that I spoke of was applicable. However, during COVID-19, there's some new rules that are very similar. That 10% is waived. You can take money and pay the taxes on it over a 3-year period. You can replace the money back into your 401k over a 3-year period. So there are a lot of advantages right now through the CARES Act because of COVID-19.
All right. Very good. I'm looking in the chat and I see the comments. This is great information. This is good. Yes, I needed to know this. Great help. So great information, Mrs. Zeno, because a lot of people are not informed that this was even a thing. So this is just information, again, in which you're bringing to those small business owners, those businesses that are for profit and nonprofit. We had a question pertaining to nonprofits, those benefits of how to set up things for those nonprofits as well. So we'll get into those questions in just a bit, but I do have one pertaining to gig workers. So since COVID-19, it's a thing called gig workers, should I say. Ms. Sharon, I do want you to take this question. It states, what is a gig worker and why is it important that gig workers are properly set up through the Secretary of State, and walk us through that process?
Okay. Some examples of gig workers are Uber drivers, Lyft drivers. I'm not sure what they call these people that go to the grocery store and buy your groceries. iCart or something like that.
Instacart, I believe.
Instacart, they're gig workers. And also you have professional musicians that do gigs, that go to clubs and do gigs. You have a lot of musicians in the church that are quote unquote gig workers and they don't even realize it. They're going to different churches singing, they're going to funerals and singing, they're going to weddings and singing. Those are gig workers. A gig worker is basically an independent contractor. And the Internal Revenue Service defines an independent contractor as a person who sets their own hours and sets their own workspace. So if you work for someone who tells you where to work and what time to work, you're a wage employee. But these people are independent contractors. And it's important for any business to be set up with the Secretary of State because that's Louisiana law. Louisiana law says if you're going to be a business, you need to be registered with the Secretary of State to be acknowledged as a business. There are a lot of people out there that are not registered with the Secretary of State that should be.
Right.
When the stimulus payments hit for businesses, so many people were not ready to take advantage of the benefit because they weren't registered or even realizing that they were an independent contractor. And the first sets of monies just went to the people that were conscious. And as far as the setting up the Secretary of State is really a simple process. Typically, you have the option to register your business. I think it costs roughly around $100. You also have the opportunity to reserve your name If you're not quite ready to register the business, you can reserve your name, and it holds for a certain time period. It's not you can do it online. Well, now everything is online since COVID-19. It's a very simple process. Takes all of a couple of minutes to use your card to pay it. At the end, they're going to send you a notification that you're registered. You also need to be registered. Well, I won't say you need to be, because there are some people that are pro being a sole proprietor, but I'm definitely pro having an employer identification number for your business instead of just using a social security number. There are advantages to that, and you can go online and get that in a matter of minutes from the IRS as well. But that's pretty much the gist of gig workers. And the CARES Act made allowances this year, which a lot of people don't know. If you were a gig worker, it made you eligible for unemployment benefits.
Unemployment benefits.
And unemployment benefits are so sweet this year that nobody wants to go back to work. I mean, you have a federal government component built in where people are getting an additional $600 a week.
That's right.
So that's $1,600 a month that most people weren't even getting. But again, most gig workers, and they weren't even set up to take advantage of this, or not connected with the tax preparer that could have given them more information.
Okay.
Yeah, that's unheard of.
Mrs. Zeno, you want to add more to that?
Oh no, she
She
hit
covered
it on.
it, huh?
Yeah.
That's just great to know.
One area you left out were musicians. Well, you did bring about the choirs, but you have a lot of these musicians who belong to the unions, because when a lot of entertainers come to town, they back them up. And a lot of them were not able to take advantage of the gig work, the gig work, because they didn't set it up properly.
And that's why I'm saying they're qualified. And I talked to a few of them just moving around the community, but they didn't even realize. Unfortunately, most gig workers do not think of themselves as a business, and that's what needs to change.
Yeah, and if I might add, establishing yourself as a business entity is so vitally important, because whenever there is a disaster, whenever there is a loss, whenever there is a need to show that you are a viable business, you have nothing to show, because when you go to a bank, or if there's a loss, the first thing SBA or anybody wants to see is a business tax return, is the fact that you are established as a business. You are a reputable business. Yes, there's a lot of maybe paperwork and steps and a little money to pay to get all of this established, but the benefits are so great when you want to grow from this sole proprietor into this LLC or S corporation. And I heard it was mentioned, I don't know how greatly it was emphasized, but when you become a corporation, you start off as a C Corp, but you have to get the designation to be an S corporation or a LLC to be treated for tax purposes as a S corporation. And I think Mr. Ron mentioned that. But so those are designations that you apply for to be treated for tax purposes as a S or LLC. Treated as a S for tax reasons.
And one thing I want to kind of add to it is a little different. It's very important for the prospective business people to open up a checking account in the business name and not commingle their money with their personal accounts, because then it's hard to distinguish what's business and what's personal.
Mr. Ron, you talking good. I love it. I love it. Yes. So as a former banker and packaging loans for those business owners, I would see a lot of that. So definitely making sure you separate that so that we understand, what's actually yours and what's the business, making sure that it is registered through the Secretary of State, getting those articles of organization. I had individuals perhaps that went through a process. They have been in business for years, but just didn't register. So they couldn't get the benefit of having a business loan with us because they didn't go through the proper channels. So that's just the importance of making sure you do your due diligence whenever you are in business. But this is good stuff. I love it, guys. All right, I'm going to move
May
on
I
to
add one more thing, Karen?
Yes, absolutely.
To what Mr. Ron said, with regards to commingling your business funds and your personal funds. Everybody runs out and gets an LLC for protection. At the point where you commingle those funds, you have penetrated the veil of protection. If you have an IRS, you are no longer, or if you end up owing IRS taxes, they can seize your personal and your business assets. If you end up in court, an attorney is going to do his research, and if he sees that you have commingled those funds, you're going to be treated just like the sole proprietor. So when you commingle those funds, you penetrate the veil and you no longer have that protection.
Right.
Oh, come on, Miss Sharon. Yes. All right. So that's another thing. People are not aware. They don't know that. You say to commingle the veil. Okay. So if you are commingling those funds already, and you have an LLC, then you have already breached, that process of stating, well, I'm covered just because I have an LLC. No, not necessarily, because you've already commingled those funds. So that is good. Awesome. All right. I like this. Good information. All right. Let's go a little bit further. You guys talk about the CARES Act, but this next question I have is, explain the different types of loan options offered through Small Business Administration, which is SBA. Now, we are doing PPP and EIDL. So if any of you could talk a little bit about those and the benefits of it. What is the deadline? I understand that's coming up soon. And so understanding who can apply for it, the benefits of it, and just the reason why this is something good for business owners.
I'll start because I actually do a lot of these in my business. I'll start with basically they're both small business stimuluses. You have the EIDL, which stands for Emergency Injury Disaster Loan, and you have the PPP, which is the Payroll Protection Program. The EIDL is a loan that's being given to small businesses that have less than 500 members, and 75% of that loan needs to be used to cover operating costs. 25% of that loan can be used towards payroll, even if it's towards paying yourself or another employee. It's a great loan. It's a 3.75% interest rate that's being paid over a 30-year period. The loan doesn't become due until a year from the date that you actually signed the loan. And when it does become due, if you're still having some sort of situation, you have the ability to defer the loan for another year. I've had clients that have been closing those loans like crazy this week. They just opened the EIDL up again about a week ago, Monday of last week. Apparently, they've gone out and they've hired some contract workers, and they are pushing it. I mean, people are getting responses in like 24 hours, 2 to 3 days. Some people are getting, depending on the industry, depending on the credit score, which is pretty much all that they're looking at because they're not requiring tax returns or anything that they normally request to the SBA. But some people are getting $10,000 advances for the grant that's not required to pay back. And then they turn around and they're being approved for $13,000, $15,000. The highest that I've seen so far is a $30,000 loan. The loan itself, actually, if it's used in its proper context, 75% of it for operating expenses, it can become a loan that's not required to pay back. Credit history, like I said, is a factor though. The Payroll Protection Program, on the other hand, is a loan that's set up to help protect payroll. 75% of it must go to payroll sources, and you can use 25% of it for operating expenses. These loans are being underwritten through banks, pre-underwritten, should I say, and there's about $2 or $3 trillion out there for it. There are a couple of requirements with it though. The employer has a certain time frame to get their payroll back to where it was pre-coronavirus. And actually 75% of that loan can be forgiven as well if it all goes towards payroll. They have to maintain payroll levels. They cannot have a reduction in headcount. And I think they have like 6 months to get their payroll back and forth, because you see a lot of businesses on the news, they're complaining because people don't want to come back to work because they're getting the unemployment. But and that's why they're complaining, because they've taken those loans and they're trying to get those loans to become forgivable. They mature over a 2-year period. It's a 1% interest loan, and the loan payments are deferred can be deferred for 6 months. So it's fully forgiven if the funds are used for payroll costs, going towards interest for mortgage, rent, utilities, those kinds of things. So they are great stimuli that are out there for those that know about them. The payroll protection arrived on the scene kind of late. The restaurant industry was hurt for a while. It took a while to get the payroll protection program in place. So now I don't know what's going on in other states, but here in Louisiana, it's not being very helpful because they can't get the people to come back to work, and then the virus numbers are going up, but it's still out there. But your bigger restaurants took advantage of it. I guess I don't really want to call names, but the big restaurants, the major restaurants out there.
Oh, Sharon, that's good. I love it. This is great information. I want to just make sure you guys hear the interest rates again for this. Sharon, if you could repeat that. I believe I heard something around 3% and then another one around 1%. If you can talk about interest rates.
The payroll protection program loan is a 1% interest rate. It matures over a 2-year period. The EIDL is just, I love it because it's a 3.75% interest rate, but you have 30 years to pay it out. Not that you want to take the 30 years, but if you need to take it, it's there. And even then, you can wait 2 years from the date that you signed the note to start your payment. People with $13,000 loans and they're paying their notice $58 a month.
And and I want to add, it seems like it was about to come out of Sharon's mouth, but I'm gonna say it there's no early payoff penalty. So if you don't want to take 30 years, you can pay it in a shorter period of time when your business is up and profitable, and then there's no early payoff penalty. And that's important because some loans does stipulate that there's an early payoff penalty.
That's exactly right.
Also, I did do a loan application for a nonprofit. I saw a question pop up. Nonprofit did qualify for the PPP loan, as well as was approved for $147,000 loan for operating expenses. And as you know, a lot of nonprofits have been hit because members are not going back to the sanctuary for worship and stuff. So they're not getting the revenues that they were once relying on for all of the expenses. However, all of the expenses still exist. You have mortgages, you have utilities, you have people that's still working for the congregation that's on salary. So they qualified too. It is a business.
They do.
Yes.
They
So
definitely qualify.
Go ahead.
No, so they definitely qualify. Your mega churches are so aware of this that it just tickles me. But they have such an amazing accounting staff. Even when the disasters hit, they are right on it. But a lot of the churches that are not, or ministries that are not quote unquote mega churches, don't necessarily have the staff to know it, but they can get out and get these payroll protection loans and take advantage of disaster benefits just like any other business, if they're properly set up and acknowledged by the state.
That's one thing that I enjoy these seminars, because a lot of people really don't understand the importance of proper bookkeeping.
Mhm.
And once we can get them instilled that they need bookkeepers and they need outside assistance, then they can truly begin to grow and prosper as they should.
Absolutely. That's so true. So I do want to add on a little bit more to that. And I do thank Ms. Jackson for bringing up this question. So with it, the ministries being as a nonprofit, in order to benefit from the PPP or the other type of loans that are out there currently for SBA, do they necessarily have to be set up as a 501c3 in order to gain the benefits of these funds?
No, 501c3 is an election that ministries take to get a tax exempt status. It doesn't have anything to do with you being a nonprofit organization. You can be a nonprofit organization and not have a 501c3 acknowledged, but that is just a tax exempt status that allows you to make purchases and not pay taxes on it. Another big misconception is that a nonprofit organization is not allowed to make money. That's not true.
Right.
A big
That's good, Sharon. Yes, because they would try to put that out there that those nonprofits aren't making money simply by nonprofit. But very good information. And we had another question that was in the chat as well. And it's from Miss J.P. Dunbar. She mentioned, is it true that you can claim losses for up to 3 years after the start of a business? I think you kind of touched on that a little bit earlier.
You can claim what?
Losses.
Is it true that you can claim losses for up to 3 years after the start of a business? I believe Mr. Zeno touched on that just a bit, pertaining to the presidential disaster loan. Is that in the area of what you were mentioning?
No, this is quite different, but
okay.
I think what she's referring to, there is a myth out there that says that, you can claim losses for up to 3 years after starting up a new business. There was something that I had in my notes that says wait a minute, I'm doing something. Okay, so the IRS expects when you asked the question about choosing the proper business. One of the things was when you're choosing the proper business, you have to go into business with an intent to profit from this business. That is, intent is no one goes into business to lose money. You go into business for it to be a profitable business. However, the Internal Revenue Service says that if you do not intend to profit from your business, then your deductions is relevant to your income. So if you make $10,000, you could only write off up to $10,000 in losses. So it becomes, they will redefine your business and treat it as a hobby. And
right.
Yes. So no, you want your business to show the true activity of the business. And remember, if your business shows a profit, all of this is contingent on whether you can go to a bank with the proper bookkeeping and get them to expand your business, to grow it, to duplicate it, to create a franchise if that's what your goals and intents are. But it's all about showing that I have a viable, profitable business. That's what you want to do.
I think the question comes from when she says 3 years, that has to do with capital gains and losses on sales of property. When you have a capital gain, it can be carried forward 3 years. And if you have a loss on certain sales of property, they can be carried back or forward. But just basic business losses, no. You declare them the year that you file the return.
Okay.
I really think I really think it's been a misconception that a business loss will increase your refund. And going in business is to go in business to make money, just as Mr. Zeno said. You know, if you're intending to have a loss, you need to leave the business alone. But business are set up to make a profit. I mean, let's be honest about it. That's the main intent why you want to go in business.
That's right, Mr. Ron.
Now,
I love it. I like how you said it straight.
now the IRS, if your return is audited for any reason, the IRS return, and they recognize that there are expenses when you are a business that are increased as opposed to once you're up and running, because there's certain startup expenses that you're going to incur that needs to be amortized, and or those capital expenses need to be amortized, or you can depreciate other assets in the business that you place in the business over the class of life and or expense them in the year that you purchase them. So there's so many ways to take legitimate deductions in the business that is relevant to your growth at the time you start versus once you get on some smooth playing field. So they look at these returns in a realistic approach like these are business people who experiences expenses, you know, that are greater at the onset as opposed to later on down the road.
All right. So we have a few more questions. I definitely want to acknowledge Ms. JP's question. She states, please clarify sales taxes for LLCs, S Corps who don't sell products, i.e. businesses who only provide services. Must those businesses submit a sales tax form monthly or quarterly?
Sales tax is a local tax. That's a city tax. That's not a federal tax or a state tax. And I don't personally specialize in that, so I can't help her with that question.
Oh,
and that's particular to the city wherever the person lives. I do know that.
Yeah.
Okay.
Well, what happens, I think, a lot of times when people set up their corporations through the Secretary of State, they check that box for sales tax, and they really shouldn't have checked it.
You're right.
I've seen that happen a lot. And what happens, they ignore it, and they get a notice from the State Department of Revenue saying that they're delinquent in sales taxes. Then they feel obligated to pay it because they don't understand what's actually happening. So, but if you're in a service business, the answer is you don't pay sales tax. You know, but you have to pay franchise tax depending on how you're set up. So there again, this gets into another topic, but the answer is no, you don't pay sales tax if you're a service business.
That's good, Mr. Ron. All right, so I'm going to do about 2 more questions. So this next question I have is, can you list your child as a business partner or owner in the business and pay them a salary? And what benefits is it to have your child listed as a business partner or owner in a business?
Well,
your child can. Oh, go ahead.
No, go ahead.
Your child cannot be your business partner. I assume when you say your child, that's someone under the age of 18. They cannot be your business partner. They can be an employee of the company if they're a certain age and they're providing, they can actually earn wages through the company. But you cannot have a minor as a partner. Because in a lot of instances, they're probably not even required to file a tax return, but they can work for the corporation or for your LLC or whatever.
Okay, very good. So what benefits would that be for that child outside of receiving that salary? How could it be beneficial for that minor?
My son has worked with my company since he was 12. If I did business workshops, he handled my registration. He made sure that papers and everything were passed out. He helped me with my workshop. Every year, I had to buy school uniforms, tennis shoes, clothes, whatever. And normally, if I pay $3,000 for his clothes or his shoes or whatever, that money goes in the air. It's not tax deductible. But if he's an employee and I'm paying him $3,000 in wages, then that becomes a business deduction for my company. So I'm getting the benefit of paying him the wages.
I love it. That's some good information there.
One other benefit to hiring your child as an employee, the wages must be relevant to the work that child does for the company.
Exactly.
And you can, you're exempt from Social Security and Medicare tax if it is a minor child working in your business. So that's one of the advantages. And as Sharon says, you know, if you pay your child $12,000 and the standard deduction for a single individual is $12,000, that's zero tax liability on that income. And you get to reduce $12,000 of your taxable income to your business.
Mm-hmm.
Mm-hmm.
Oh,
Yeah.
this is great. I love it.
And you said
So
something that's really key because it has to match the energy. I heard T.I. say the other day, even if my son sweeps the floor, he's on the payroll. And I wanted to tell him, if I had his number, I would have called and told him, no, sir, it doesn't work that way. But that is the way this information is being thrown out there. They're saying it's a write-off, but they're not breaking down the specifics of how it works. And it's going to have a lot of people in a major audit situation.
Right.
that's why you guys are so important to break this information down to individuals that just don't know, even to hire their children if they are in business. And the proper way to do that is just so important. So I love it. I love it. Mr. Ron, you wanted to add some more to that, or you're all good?
No, I think they've just about covered everything. But
Yes.
the one thing, it gives the child an idea of what work is all about, how important it is, and at least he has some insight of something dealing with financing. And that's something that a lot of young people don't have a chance to really experience. You know,
Right.
what money is all about, what expenses are involved, what kind of work is involved, and just meeting the general public in terms of assisting them in a financial manner.
Yes, you're talking about language now. I love to talk about financial literacy, the financial education piece. So definitely that is so important. And by parents that have businesses, that's just another way to incorporate that as well. But of course, you know, connecting with your accountant to just make sure that it is set up correctly and that you're able to make sure that it benefits you in the long run. So that's just great information. So I'll do one more question for you guys, and then I'll end by you guys providing your information to the viewers that are watching, and then any closing remarks you want to add on pertaining to taxes, okay? So the last question that I have is, what are some common mistakes made by LLCs?
For me, the largest mistake is that individuals don't understand what an LLC is about in terms of setting up the proper entity, because all they have in mind is that I'm protected for limited liability. But it's more than that. You have to have some kind of filing entity. How are you going to file your taxes? And you'll be surprised when a lot of them come to accountants like us, they don't have a clue of how they should file or even how they want to file. All they know is that I'm a limited liability company.
Mm-hmm. Mm-hmm.
And I would say co-mingling funds and not knowing if they need to make the 1120S election.
Right.
Those are two of the biggest ones that I've seen for years. Co-mingling funds, not having a separate business bank account, and not knowing that they'd be better off being an 1120, having the 1120S election as that LLC.
I believe that a person that's contemplating going into business need to have an accountant or bookkeeper, someone that's going to keep proper records. The main thing going into business you will find is record keeping. Anything any kind of courts or audits or anything that you go to, you're going to find that record keeping is the answer and the key that unlocks the door to keep you out of prison. There's so many deductions and benefits to going into business only if you can record it and keep records, proper record keeping. I mean, people who maintain their records, especially if you're in business, record keeping, there's no 3-year limitation, no 7-year limitation to record keeping, is as long as you're in business. As long as you have an asset that you're using in business, you have to keep records, because when you sell those assets, you got to determine whether or not there's a capital gain or not, you know? So all of this is relevant to taxes as long as you're in business, rental property, any business that you're in, flipping houses, people doing all kinds of businesses now. And so, and I believe this was a good question on home-based business, because you see more businesses are operating from home now. Businesses are starting up at home because of the COVID-19. So that's a very good subject. And, you know, I appreciate the formation of these questions to bring the Republic and make them informative.
Awesome. Awesome. All right, you guys, this was great information, a great session. I love all this information which you provided. I learned a gamut of information. I'm going to go back and watch this again just so that I've gotten all that I needed. But definitely, I do want each of you to tell us how we can get in contact with you, the services in which you provide. You just never know, the individuals that are watching may be needing your help. So definitely provide your information, your contact information, the services in which you provide. And even if you want to have some closing out remarks on taxes, some takeaway, definitely do so by providing that information. Ms. Sharon, if you want to go ahead and start for us.
I'll say I spent the majority of my IRS career as a revenue officer, and I'm sure Mr. Zeno and Mr. Johnson are very familiar with what revenue officers are. But what I would like to say is, if you're going to go in business to make a profit on what it is that you're trying to develop. A lot of people go into business, they try to do their own books, they try to be their own attorney. You need to have a bookkeeper and accountant, and then that leaves you time to work on whatever your craft is. The majority of cases that I have dealt with over the years goes back to people trying to either use LegalZoom and be their own legal person, or trying to use Intuit and be their own accountant. You can't, if you're doing all that, you're not making money welding or whatever it is that you're doing. So that would be my spill there. And as far as who I am, my company is Panache Consultants. And as I said, I've transitioned after a 26-year career with the Internal Revenue Service. We are an accounting firm, and we bring an exceptional expertise with regards to small business tax, and we specialize in helping people resolve tax debt and file years of returns. There are only so many ways to close a tax case, so when you come in, we already know what's required to close the case. We function from a position of integrity. I'm not going to sit here and tell you that you can get a settlement agreement when I know that you can't get one. So if you have any issues like that, unfiled returns, owing the IRS, payroll, after we get you straight, a lot of companies, we want to keep you in compliance. We're going to do your payroll right. My web address is www.projectpanache.com. And I don't know if we can put anything in the chat section, but I can put it in the chat section for them to see it.
Absolutely, yes. And this live will be up, so they can definitely go back and watch it again. But if you are able to put that information in the chat, that would be great.
Okay.
All right, Mr.
And
Zeno.
I enjoyed being on this panel with Mr. Zeno and Mr. Johnson.
Yes.
Thank you.
All right.
Okay, so again, my name is Fred Zeno. I'm here in Beaumont, Texas. but I work virtually everywhere. I have clients all over the United States. And like I said, I've been in the business for over 36 years as a tax practitioner. I am also a certified acceptance agent. So those who are in the listening audience that need ITIN numbers, we can do that for you. And the benefit of having a certified acceptance agent, you do not have to send your identification to the Internal Revenue Service. We do authenticate you and send in your application and your tax return so that you can get a ITIN or renewed ITIN. Also, we do bookkeeping and payroll as well. The one thing that we do is we build relationships with people in our community. So our office is like a place of resource. It is the pillar in the community. We help those who come into our office, and of course, we expect to be paid for the services that we render. We do not expect to be paid only if you have a refund coming. We take care of your tax needs. We keep you in compliance. If you get audited or have to go before the Internal Revenue Service, we can go for you. We can go with you. We can go along with your group. But most of all, we can take care of those needs because we know the language. So we represent you well. And that's what you pay for, the benefit of having someone on your side, on your team, are there for you when you need a representation. And I guarantee you that takes a lot of stress off of you when somebody can speak for you. I think it's called Jesus, but
Yeah.
nevertheless, my phone number is 409-832-1099. 1099. If you're self-employed, you'll get one of those. So, gig worker, and my email address is fzeno@comprotax.net. fzeno@comprotax.net. And I may add in closing that I tremendously enjoyed this discussion, the panel, and all the information that I learned from each panelist on the thing, as well as Ms. Karen Burks. Thank you.
Oh, thank you so much. It was a pleasure as well, Mr. Zeno. All right, Mr. Ron, if you can give us your information, how we can reach you as well, and just some closing remarks.
Okay, my name is Ronald Smith, and my address is 1520 Thomas H. Delpy Drive, Baton Rouge, Louisiana. I'm in the McKinley Alumni Center. I offer full services for individual income tax. I also do corporate returns, monthly bookkeeping service, quarterly report. My email address is rsmith92@me.com. And I think this was a very informative session because people just need to know that you do need a bookkeeper and you can't do it by yourself. If you're bogged down with administrative and detail work, that means you're neglecting what you put there to really make money. And that's what it's all about. You need this system to keep organized and to keep focused on what you really need to be doing, and let the accountant as a professional take care of what he needs to take care of, she needs to take care of. And thank you for having me.
No problem, Mr. Ron. Thank you all once again, Ms. Sharon, Mr. Zeno, Mr. Ron. It was a pleasure. I agree with you. This was a great session. We learned so much. I've learned so much from this as well. Even the individuals that were watching mentioned how informative this was. So this was great. I enjoyed it. But another great thing is we will continue this with the Economic Empowerment Ministries at United Christian Faith Ministries. We will do this again next month, but with a different type of topic. We are talking about on next month real estate. We will have some professional individuals that are talking about real estate, whether it is the inspectors, the mortgage originators that are on the back end of that particular loan for the mortgage. I mean, just all in whenever it comes to real estate. We want them to be involved in helping those individuals that are going through that first-time home buyer process, or if they're looking to get investment property. If it's not their first home, we want those individuals to be on this panel to talk about those things that are helping those individuals get that home, that next property. So that's what the topic will be for next month. The date is scheduled for July the 30th. That's on a Thursday night. So we definitely want to make sure that people tune in for our next event. And then before I go, if anyone would like to, send us some information or have interest in joining the economic empowerment team, or would suggest on upcoming topics which we should talk about, definitely email us at ucfmdebtfreearmy@gmail.com. Again, I am Karen Burks. I am the director with Economic Empowerment. Sharon Weatherspoon is also on Economic Empowerment team with us as well. So we just love what we do in order to help the people within a community and also within the ministry on how to help themselves grow, not only personally, but also through their business as well. So with that then, all on tonight, we had a great session. Once again, you guys, thank you so much once again, and have a great night. Thank you.